In buying our first home, do we need to provide a 20% down payment? Is the down payment is still at 5%? We will discuss about it in this video. It's very exciting to discuss about the spring market in Winnipeg. We have many listings right now and a lot of buyers are showing up. So we're still hoping that it will be a balanced market, but it is just the beginning of spring. We'll never know, but the beginning of the year starts with a lot of multiple offers, somehow showing that the seller's market is on right now. As buyers, we have to be patient in finding our first home, okay? The market in Winnipeg is on the rise. Prices are still steadily going up. It only shows that it is a very strong market. 2024 is a strong market in Winnipeg and everybody is happy about it. But hopefully buyers are happy too and they can get their fair share of getting the right property at the right price. So now that it is going up, we have this questions. Is the down payment is still at 5%? Yeah, it is still at 5% for properties under 500,000, and that's actually the rule. Anything over 500,000 will be 10%. Okay, so if you're buying a 600,000 house, you can qualify for a 25,000 on the first 500,000, and then the 100,000 over is what? That's 10%, which is 10,000. So overall, your down payment needs to be 35 grand for 600,000 home. As buyers here in Canada, well, we're talking about how this down payment is favoring you as buyers. In Canada, we have this 5% down payment. We call it a high ratio mortgage. Well, because conventionally, you can only buy a property if you have 20% down. But government program initiated this high ratio mortgage. They call it an insured mortgage, and giving buyers the opportunity to buy a property with 5% down. Isn't it amazing? So it's just something that buyers has to qualify and the property has to qualify as well. So both of you needs to be qualified in order to get the approval of both the insurer and your bank. Alright, so here's actually a scenario. So previously, before this program, the 20% down payment is required for every buyer. So if you're buying 500,000 home, you need to have $100,000 down payment. But who can afford the 20% down payment? It's only a few. And therefore, here comes a program saying, hey, as buyers, especially first-time home buyers, you can buy a property at 5% down. That's a big opportunity. The financial institutions will finance 95% and you will only need 5% down. But here's the thing. There are 3 insurers that plays a major role in this program. So who are they? The CMHC, Sargent, and Canada Guarantee. So these insurers play a very important role in the high ratio mortgage, which we also call an insured mortgage, meaning they're gonna play as the middleman between the buyer and the financial institution and will guarantee or will insure the mortgage with the lenders. In a layman's term, this is the role of these mortgage insurance companies, these 3 companies. They're gonna assure the financial institutions that you as the purchaser slash the borrower can pay the mortgage, all right? But in doing so, they will add a mortgage premium on your mortgage loan. The premium will range from 4%, That's when you provide a 5% down payment. So they're gonna add a 4% premium insurance. But if you provide 20% down payment, then there will be no premium. It's only when you provided less than 20% down payment, that's where they will gonna play that role of being the middleman, right? So just for the layman's term, for you to understand how the high ratio mortgage is being processed. There is an opportunity, even if you don't have the 20% down payment. So there is an opportunity for you as buyers to buy a property if you have 5% down. Okay, that's a very good news. Now, what if you're buying your second property? We're not talking about the first time buyers anymore. Can you still get the 5% down payment? Is it still available for you as buyers? The answer is still yes. Okay, as long as you will qualify for what the bank is requiring, you are still good to buy a property at 5%. Not the end of the world for second-time home buyers. You can still get it, all right? The conventional mortgage, because that's the 20% and above. You don't need the mortgage insurers, you don't need CMHC, you don't need Sargent, you don't need Canada Guarantee. You have 20% down payment, you're only dealing with your financial institutions. But anything lower than that, you will need to deal with these three. Well, not all of them, either one of these three mortgage insurance companies. Okay, so that's how it is when it comes to the down payment. And by the way, as first-time home buyers, you also have this chance of setting up your RRSP and FHSA. So those two fundings are available for you. There are ways to go about it. We will need a financial advisor in order for you to set up one. Is there any advantage if we will be buying our first home at 20% down payment versus buying it with only 5% down? My answer to you is yes, for many reasons. Okay, number one, if you're buying your first home with 20% down payment, you can avoid the premiums that is being imposed by the mortgage insurance companies. That's a big savings for you, up to 4% of your mortgage balance. It means that because you're only dealing with your bank or credit union or your financial institutions, that premium will be waived. Okay, so there's no middleman anymore, because the role of the mortgage insurance companies is to mediate between you as purchaser and the financial institutions to provide you whatever funds you need in order to purchase the property. So that's one big savings for you if you're buying your first home with 20% down. Number two is that for sure, if you were able to come up with the 20% down payment, you are way ahead of the game. You're able to save that money for the down payment, and you'll only be paying 80% balance of the mortgage. That's a big plus factor for you, saving again not only the mortgage premiums, but you are also saving the interest of your mortgage in a given amortization term. All right, so that's another plus factor on your financial savings. And the number three, I would say, is that the pre-qualification process and the approval of your mortgage will only be done with your financial institutions and not including the third party anymore. So overall, there'll be less stress and less time to process the approval of your financing when you're buying your property. Also, don't forget that being a first-time home buyers, you can also qualify for the first-time home buyers tax credit. That's an extra savings for you when you file your taxes the following year after you purchase your first home. Alright, so those are great information to know. Well, in my next video, we'll discuss more about these programs, the government programs. There's a lot of things that needs to be learned here. And it's so excited to meet one of the financial advisors who's dealing with this type of funds for you. So we'll discuss about some of those financial information next time. And with that, I'll see you in my next video. Bye for now.